Coconuts, welcome back to Weekly Market Updates with me, Rakesh.
Anthony.
And Jefferson, welcome to the new week.
Hey, Jeff, good to have you back, man. Hope you're feeling better.
Yes.
A lot better. Yeah. Goddamn booster.
Terrible booster
was the
shots,
booster,
right?
Jeff?
Yeah. Did me dirty. Yeah.
Got it. All right, listeners, for today we have a pretty interesting topic. We realized that from our last podcast, you love talking about the Ukraine-Russia crisis. And we thought we'd talk a little bit about that today, right? So really what the Ukraine-Russia crisis has to do with the stock market. And that's the first couple of topics that we're going to talk about. One specifically in stocks, right? So how would that relate to your portfolio? How would that relate to investing in the next few months as well? And last but not least, we're going to bring up our good old stock earnings, right? So Square just had its earnings, and Anthony is going to be taking us through that.
Yeah.
All right, to kickstart, who is it first? Oh, it's me. Okay,
You.
cool.
Yes.
Yeah.
Let's go.
It's me first. All right.
Come on, guys.
All right. So tell me, right, during this war, during all of this, are tech companies the safe haven during war? I guess that's a question I have for you guys. Do you think it would be?
Okay, Jefferson, you are shaking your head, right? Why don't you go first?
Yeah, yes and no, I guess. I mean, there's certain tech company that I read about, like maybe more so in the defense tech, or all those technological company that's deals with say geopolitical geographical mapping and stuff like that. Yeah, I would see some potential in that. But we're gonna talk about stuff like Apple, Microsoft, Amazon. Yeah, it's just gonna be very much muted. I would assume maybe a little bit affected here and there by supply chain, but it's the old story that we have all discussed. Yeah, but what about you guys? Yeah.
Anthony, what do you think?
I don't know, right? I was going to say that it's slightly different. It's really a flight to safety, right? And I mean, sure, you can fly to safety in gold. Maybe you'll fly to like Bitcoin if for whatever reason you believe it. But there's also that traditional thing of blue chips, right? And that's maybe where the big tech comes into play now, that they have kind of supplanted your Goldman, your cities, your big utilities as the blue chips that you kind of run to in times of crisis, because your war, well, Google will still be Google, right? I mean, Ukraine might not be able to use Google search, or Russia might not be able to use Google search, but the search business still works. It's 99% unaffected, and that's why they're safe haven, right? They're big. And if it's uncertain times, you run to the safe stocks that won't die, then and that could be what's causing it, right? So if it's like Google, Apple, I cannot see the point. If it's maybe like tech banks like SoFi, I don't know, Ally Bank, whatever, you kind of see the point as well, right? So it's this nice intersection of, well, they're big, their business models unaffected, it's all safe, versus and the non-profitable or the fast-growing tech companies that we like talking about that have been dying for the past 3 months. Those are not blue chip by any measure. So those will continue.
Yes, of course.
Yeah, going up and down.
Yeah. And I think it's fair, right? So I found it a little bit shocking, in all fairness. So when the Ukraine Russia crisis hit, stocks actually dropped, right? Or most of the stock market started decreasing. We saw the Dow decrease, we saw S&P decrease, but within the same trading day, big tech actually rose. Now, hear me out. Microsoft actually closed 5% higher on the first day of war. Apple closed 1% higher. Oracle closed 3% higher. Adobe and Salesforce jumped 8 and 7% respectively within the day, right? So it dropped and then it shot up again. For me, that's insane, right? I would never have thought big tech to be the flight to safety. I would have thought, gold and so on. What are your thoughts here? You can see that. You can see that.
No, I don't. I think it's the same old story. Let's try not to be too ready to give stories where there might be none. It could just be a coincidence, right? Because the whole lead up in the week, markets have just been performing badly in anticipation of war. and it finally happened, and I think the US announced measures, and the measures were weaker economically than expected, right? So the first round of sanctions on Thursday night US time were weak, in the sense that they were weaker than expected, and if we need a reason for the rise, I think that's probably the best proximate reason to give, in the sense that, then we don't need to worry that much about inflation because we're not sanctioning the banks, we're not removing them from SWIFT, we are not sanctioning oil flows, we're not sanctioning gas flows. So my economy still performs, and I won't get higher inflation, and therefore I can still grow as a market, right? And it's that bit of relief, maybe that psychological, that pushed it up. I don't know if it's flight to safety, and frankly, I don't think anybody actually knows that this is just newspaper reporters having to tell the story, right? Every day they'll tell you it went up because of this, it went down because of this, but did it really? Well, we'll see.
No one knows. Yeah, Jeff, what do we think?
Yeah, I mean, I totally agree with him, right? With Anthony's thoughts. In that sense, if you want to say that it's flight to safety, I mean, then maybe you expect a little bit more moves in terms in crypto as well, right? Because like, oh yeah, everyone like Ukraine, Russia having to rush to, you can't use fiat anymore, and then going to crypto, but you don't see the same. You
Oh
don't see
no,
the same big
that's the
moves in
narrative
there.
for today. Sorry, for first month. That's today's
Yeah, different. Yeah,
Exactly. So you see the thing is that it's all conjure up news, right? Because like you need to, if the media can't explain something, then it has to be attributed to a factor in that sense. Totally agree with what Anthony was saying. But I do think that maybe if you talk about, say, like on the front of like Tesla doing well, because say like what you have the Starlink, right, that they issued
Oh
the
yes,
first test in Ukraine,
Yes.
then maybe in that sense, like that successful test, that it's a lofty plan that it finally worked out. He paid off. Yeah. So in that sense, yeah, we can attribute that to the big tech success in that sense.
Yeah.
But yeah, I think it's still too myopic to just attribute saying like, hey, big tech is the reason for a flight to safety and everything else. Yeah, I don't see it
Yeah,
that way.
I think
nice.
just to add a bit onto that, you like, if there are clear business reasons, okay, fine, you can attribute it, right? Like BP needs to sell its stake or essentially raise more than 25% stake. That's $2 billion worth, and market cap drops 2 billion. Okay lah, you see the reason and then go, okay, fine, this
Of
is
course.
maybe the story. But if it's more fluffy, that it's sentiment changing, people taking profits, how do you know? I don't know who wins or who loses. I don't even know whether I'm profiting, right? Much less everybody else in the market. So, I think we have to be a bit careful when we're looking at market news and people trying to explain movements, because it could just be random.
Yep. It could be completely a coincidence. I mean, one thing
Yep.
that I also know is that I understand is that Ukraine also hosts a lot of programmers, right? Okay, so before all of this, there are a lot of programmers in Ukraine for Europe, for the world, that actually code in these big companies. So when I was, looking through it and seeing it, it was actually a little bit of a question mark for me as well, because I know that the programmers are in here, so they can't effectively work. So how would that relate, right? So I think that's one thing to note. I think on another point as well, the semiconductors, right now they may not be linked and all of that, but semiconductors actually closed a bit higher as well. Now, whether that is regards to the industry, whether that's regard to the war, I'm not entirely sure. I think I did even read some articles to say semiconductor close high because of the war, whether it's a flight to safety or something like that. I don't know. But I found it quite weird because I would expect supply constraints. I would expect, supply chain constraints. I would expect all of that to happen, especially in Q1 for semiconductors. What do we think?
Yeah, I think, I don't know if Ukraine or even Russia has any fabs in that sense to create semicons, right? I mean, it's
I'm
in
not sure
China, it's
either.
in Taiwan, it's in US, some parts of it is in Europe. The machinery, I don't think Russia has a big part in that chain, right? There might be supply chain issues in terms of, ships can't really leave, and therefore the whole shipping industry is affected. Maybe not. We don't know enough, to be honest, to tell whether that will be the case, except that in general there will be supply chain issues, and And I think semicon just seems like a weird place to say it. I mean, if it was agriculture, oil, gas, I'm more than happy to agree, because that's the
Yes.
key export. So if they are sanctioned, it's blocked off, ports are blocked, then well, fine, right? There's supply chain issues everywhere. But
Absolutely.
if
Or
it's just
pipelines, yeah, whatever.
yeah, pipelines. But if it's just some generic, or there might be changes in supply, and well, we know semicon as an industry is already facing a supply crunch, and this will exacerbate it. I don't think the causal link is that clear. Maybe the author's smarter than me and he knows something better. Then hopefully he explains it better. But at the end of the day, I think that's it.
Awesome.
Right?
Awesome.
Like it's all about the causal links, right?
Yeah, I mean, I guess one of the things that we can think about is also like how in the semicon industry, right? I mean, limited understanding for sure, but from what I know is that you need neon gas. Yeah, so neon gas is a consumable for which the usage volume is low within the wafer manufacturing process. So the thing about it is that um Russia does produce this neon gas, but I don't think it's such a big impact in that sense. But definitely it will sort of like reshape the different companies' cost formula. And if you want to think from a different point of view, it's also like how you have China, pair growing, Taiwan as well, and Taiwan is also a big producer of semicon. Yeah, so now if you put it in that way, then you can see like, oh, maybe it's just a little bit of the geopolitical reasons for which like I mean, your American semiconductor companies become like that flight to safety, yeah, because it's a best alternative in this whole conflict right now, right, to produce the necessary chips that people demand. Yeah, that's how I can see it as well. Yeah.
Or supply gets even more constrained, so they can push prices up even higher.
Yeah, of course.
Yeah,
Yeah.
that could be. That could be. Cool. Yeah, I thought this was an interesting topic to just discuss with and get a coconut to listen to as well. And know that, right? Just make sure we know what we read, make sure we can find some sort of causal links, and that's what we're here to do. And yeah, well, hopefully we'll know more in the coming weeks whether it's actually true. But it's yet to be said. The Taiwan thing.
I hope not.
I hope not. I hope it ends, right? I really just hope it ends.
Yeah.
This is not a nice timeline.
No. All right. Off to war. Jeff, what is it good for?
Yeah, I don't think anything really
guys,
good.
You should be laughing about this. Come on.
That's true. That's true.
I don't think anything really good comes out of war, right? Correct, because like the whole humanitarian cause of war is paramount above all. But given the fact that we are podcasts and we got to talk about it, then we definitely have to focus on what everyone wants to know, the ramifications to across the different markets, right? So I mean,
Absolutely.
I did have some thoughts about it, and I'm gonna limit myself to just the
Tell us.
US and Asian economies. Yeah, but
by the way, Jeff, before you go on, when I say what is it good for, you're supposed to say absolutely nothing, right? It's a quote from a song. In case you didn't know. You're too young,
I didn't catch
bro.
that.
Bro, yeah, you got trigger Asia cash.
Oh, hey.
Yeah. But I guess one of the like I guess what's top of your head for you guys, like when you guys heard about the Ukraine war, like what potential impact do you guys foresee on your end? Maybe Rakesh, you wanna go first?
Honestly, for me, I didn't know what to expect. I expected it to decrease, right? But by how much, I don't know. In my mind, and as an amateur investor, I was just thinking, whatever happens, I trust the fundamentals of my company. I'm gonna just hold because this will like everything, right, will go up, and I just have to hold again. For me, the two variables, one was the war, so I knew it was going down, but I didn't know by how much. The other one was the FOMC, right, and what they're going to do in terms of interest rate hikes, etc., etc. These two things, I thought in my head it's going to go down. I don't know by how much, maybe 10, 20, 30%, but I just have to hold. That's me.
Anthony, what about you?
I don't know. I just thought, oh yeah, people react strongly to this because it's bad, right? And it's sad and people don't like war. So the markets will sell down. But really, if you look at at least my portfolio, which is REITs heavy in Asia and like bank heavy and in Singapore and tech heavy in the US, it's not going to affect any of it. Right. I don't hold Lockheed, I don't hold oil and gas companies. If I did, I'll be worried. But I don't hold any of these. So it's like, oh yeah, probably nothing will affect my portfolio, but the market will go down in general. Time to buy. After it stabilizes, that was my thought. Unfortunately, because on Thursday, I was like, oh yeah, 10:30 p.m. I'll wait for 11, the pre-market settles down a bit, and then I'll start buying at 11:30, put my buy orders, all that. But they decided to not have good sanctions, so I couldn't average in, which was terrible. But I think that was pretty much the play, right? It's like, yeah, but markets will overreact, but it will go back up in the longer run. I like my companies; it's not going to be affected to the extent I can see it. So I'll buy and lower my cost base, but that just did not happen.
Right. Yeah, I mean, for myself, I think the first thing that came to my mind was FOMC, right? Like, what exactly Fed's gonna do? And number two was really like how when I just scroll through TikTok, right? I mean, on top of the fact like how people were talking about the whole Ukraine-Russia invasion and stuff like that. I also see people started talking about buy the dip, like this is an opportunity to buy the dip. Yeah,
people
I think we have been so
fast.
Sorry.
People bought a bit too fast. It's like by 1 a.m. 2:30 people are buying the dip.
I think that's the result of the systematic traders, not the retail guys. Yeah,
not the guys on TikTok.
Yeah. But I think, but I think one of the things to think about is that we have been so conditioned by the fact that the central bank will just support us through and through, right? Through such a situation, and we ourselves we haven't really seen a full-blown war in that sense, where you see a country getting invaded and threatened to be taken over. So to us, it's just like, it's just another buy the dip opportunity, which is, I think in some sense needs to change, and that's what's going to happen in the coming rate hikes as well. And of course, like what you guys have mentioned, I think there's definitely the potential of it having to be a lot more volatile, but thankfully not. But I think right now, what we are seeing in the short-term interest rate space as well, there's a caution from quite a few economists and rate strategists saying that there's potentially a liquidity crunch happening because of all the different sanctions that is being imposed on Russia as well. So like how you ban SWIFT on them, that's going to have an impact on payments. There may be missed payments as well that can be huge, affecting the different markets as well. So I think it's an interesting space, or interesting way to see it. So liquidity might actually come back again. Yeah, cheap liquidity.
Right. So take us through that, Jeff. Right, just a little bit more in deeper there. So banks, I mean, with the SWIFT issue and then sanctions on Russia, so on and so forth. I think only with EU at this moment in time. I'm not entirely sure. How would that reduce the liquidity, or how would that affect my stocks?
So it's not really announced. It's not announced as of yet, but what's going to happen is that right now, if they actually do impose the whole, they weaponize SWIFT against Russia, then what's going to happen is that you have Russia companies that have basically have a lot of holdings elsewhere, right? So they unable to retrieve their foreign holdings, mostly in USD in that sense, and that's going to be an issue if they have to pay up for their workers. That's just upfront, right? Workers' costs, your labor costs, and what's not, all of which accounts for something. And if you have missed payment across the supply chain itself, it's going to trickle down. So at one point, it's going to cause an issue for people, because the financial system is no longer smooth running in that sense. And that's what exactly happened during the COVID crisis in March 2020. So the Fed eventually stepped in and said, hey, we are going to do this whole FX swaps intervention across the different central banks, and then I lend you guys USD to just tide through the whole situation, which result in the whole, liquidity. I don't know what you want to call it, like we cheap liquidity, that we have right now. Yeah.
Yeah.
Excess
Got it.
liquidity, yes. Yeah.
Excess, yes. That's probably
Yeah.
a better word.
I think I read the same article.
Yeah. I mean, like there's this guy, Zoltan Pauza from Credit Suisse. He writes very good pieces on such things in the money market space. I like his stuff. And he's one of the few that has been cautioning about it. He's like the oracle in this space. So
Right.
potentially that might be an issue as well. And
Yep.
maybe moving on to the Fed, yeah, I mean it's good lead in anyway. I think there's still gonna be a hike in March for sure, but a
Right.
50 basis point move maybe not so much. Because right now they have to wait and see what's going on. I mean, they are not directly affected by the war in that sense, but
Mm.
Right.
with whatever I've been saying about liquidity and everything else, it's something that will impact the Fed's decision to wait and also to see where inflation will take them, right? Yeah,
Yep.
that's a couple of things that I potentially see. Yeah. What about you guys? Any thoughts around this?
Anthony,
I don't
you go
know.
first.
I think the short term rates markets at least seem to be pricing in more of a more likelihood of a 25-point hike than 50. Right? Which kind of makes sense, right? Because you don't. I think in case this conflict drags out and we don't know whether it will, the fear might be that the Fed comes and go, okay, I'll raise by 50, and but the conflict escalates and they decide to sanction gas and decide to sanction oil, and that adds further inflationary pressure in the US, right? And decelerates economic growth. I think that's going to be the scarier part of it. And that just means that the Fed might have overcorrected a bit. So slow and steady seems to be the more reasonable approach here, which makes sense to me, at least from a layman's perspective. So yeah, that I mean, I wouldn't be too unhappy with like a slow hike and just hiking every month or every other month.
Yeah, man.
Yeah,
I
I
think
mean,
for me, it really
yeah,
depends as well. So I think there's a lot of balls in the air. You know what I mean? Like just literally just juggling all over the place. And the Fed is trying to balance, like what Anthony is saying, where he doesn't want to be too much the other way. And I think we have covered this, but I think that war aspect and this geopolitical or this politics aspect of things to the point of cheap liquidity, as you call it, excess liquidity, could be a big factor, right? So for me, 25 basis points, 50 basis points. I hope it's 25. So my stocks can rise a little bit more, right? Being selfish. And of course, our
I
listeners
don't live
out
in
there
the
that
US,
have
right?
invested.
So it's
Exactly.
fine. US inflation rate
Exactly.
doesn't really care much.
Well, it
Change my life.
affects our stock prices, right? But that's about it.
Yeah.
Yeah.
My Cai Peng is raising by more than 7.5%.
Actually, I don't believe that's true. You know, the indirect cases of the interest rate hike will affect Singapore. We aren't we pegged to the
Yes.
US? So that I'm sure there is some trickle down effects as well.
There will
So
be. I think we have a quite different inflation outlook, and what our inflationary pressures are also slightly different. And then how we measure it is also different, of course. So yeah, I
yeah,
mean, it's a bit tongue in cheek to say that I don't care about the US, but
yes.
I'm okay. I would focus a lot more on Singapore inflation and how much my rice costs me.
Good point.
well,
Anyway,
well,
before as that digress, I just wanted to point out to the coconuts, if you are interested in how Singapore is, Singapore's inflation and all that is related to the US interest rates, please drop us a note right on our Telegram. We're happy to do a deep dive into it. Right, but we'll only do it if you guys want to hear. So please let us know. All right. Plug pulled. Jeff, please continue before we digress again.
no. I mean, it's kind of a segue as well, right? Into I think it's good to also look at what we are gonna do, the Asian economies, right? Like how this whole thing is actually affecting us, and I mean, one straight up thing apart from the rice having to be more expensive is that oil, like petrol has essentially increased by
Absolutely.
21%, right off the bat, from the war, right? And right now, if you see the Asian economies, predominantly we have been so conditioned by the fact that, hey, the few global teams, right, which is rising inflation, repricing of the developed markets, rate hike cycles, these have been the drivers of growth and rates in Asia. But going forward is that how will then the war affect all of us in that sense? Is that I think there's a couple of things, right? One is straight up, we all know higher commodity prices. Things are going to be a lot more
Mm.
expensive. Malaysia, it's going to benefit for it for sure because they are positive oil and gas trade balance country. So there's a
Yep.
few other countries that will benefit from it. But all in all, you're going to expect supply chains to be a lot more expensive. Number two is you will see the global core rates having to rise. Then eventually, you know, the Asia economies will have to raise their rates. But it's going to be more gradual in that sense. It's always
Mm.
wait and see what the US is doing, then we follow. Always the
Yep.
case. So we still can hold on to the housing loans that we all have. Yeah, for now. Don't have to refinance it yet. Yeah. Yeah.
Okay, don't own property, then it's fine.
Yeah.
Aiyo.
Yeah. And the last one is
Mhm.
probably more of a like how this whole thing is going to affect us, right? With the geopolitical tension. You have China, Taiwan right now, being at transgression with each other, Russia,
Mm.
Ukraine, and then Myanmar as well. You have a conflict right there. Like, are all this going to just escalate in that sense? Will we have more transgression across the world? And if we do, then definitely we're going to see a greater swing in terms of your global resentiments. You don't want it to be a norm in that sense. One is not great for all of us. Yeah. Two
Yeah.
is definitely not great for our portfolio as well because there's going to be a lot more greater risk aversion and yeah, I wish not to see that happening, to be honest. Yeah, nasty.
Yeah. I don't
No,
know,
I think
right?
that's
Like you
fair.
read some commentary and they go, oh yeah, this is the sanctions the US and EU are facing. It's effectively like what they are planning to place on China in case something happens. Like it's just practicing a playbook, right, for the future.
Yeah.
It's terrible.
Beta test is it now? Beta test with
Yeah,
Russia.
exactly. They tested on Iran, right? Then now they are testing on Russia.
True.
Then
True. True.
maybe after this beta, they will roll it out into the US if anything ever
Yes.
happens. But yeah, again, hopefully not.
I
Yeah, but
mean,
it's just scary, right? Yeah.
Yeah.
it is. It is. But I think at the same time, right, for Coconut and our listeners out there, right, there's of course a lot of things in there, a lot of variables. Potential, in all fairness, I don't think has been this high between US and Russia, US and China as well. But let's focus on the things we can, right? While there are tensions out here in Asia as well, for those listening, let's focus on what we can, what we do. And for me personally, just worry about the fundamentals, whether that business or that industry is affected by these tensions, and then go that way when it comes to your investments. Before we maybe move on to the next topic, any quick tips for our coconuts and listeners out there with their portfolios and worried about war and how it will affect
I
them?
think nothing really changed. The playbook is still pretty much the same. Just we're gonna see higher rates by the by December 2023 for sure.
Yeah.
It's unlikely that the Fed's gonna stray away from what has already been a predetermined tightening path. They need it to happen, but I think what's gonna happen in the short run, which is you're gonna see stronger US dollar, wider credit spreads, maybe even lower equities. I mean, for sure, lower
Mm,
equities. Yeah. All of which will be challenging for the Fed, challenging for us as well as investors. Um, and how do we then, prepare ourselves and create a more insulated portfolio? That's something that we should all think about. But definitely, playbook don't really change. We have already discussed this for a while.
got it.
I think
Well,
it's
I
status
guess I
quo.
guess
Yeah.
utilities are a bit like higher risk now, especially like
Yeah.
if you are on major,
Utilities.
right?
Commodities, I've been
Maybe
picking
not as
that for the
expensive,
longest of
right?
time. Yeah, yeah, yeah. Running well,
Okay,
guys. Yeah.
okay. Let's segue a bit, right? So is this commodities thing going to be sustained, or is it well, I guess pricing in a sense that people anticipate restrictions coming in, so that and therefore supply constraints in future, and then that's why it's been rising. I think that's the
I,
question, right? Like we're at 100 oil. Are we at 100 oil, or did it fall back below? Can't remember.
Oh,
Um,
I don't know what the current rate
but
is.
yeah, are we expecting like further increases essentially, right? To like 120, 150? I don't think it's ever gone that high.
well, I mean, the way I see it is more of it's definitely never run that high. You're right to say that, but I
Mhm.
think one of the one of the core reasons for this having to happen is that one was what we have already discussed, is the whole supply chain issues, and how
Yep.
commodities is in some sense the flight to safety when people look it to having a rising rate hike, which we already discussed. Then
Mm.
the whole thing
Mm.
about the war happening, and how Russia, having the whole oil. I mean, so long as you hear Russia oil, and then everyone will just like in the short run will just rush towards it and say
Yeah.
like, okay, we gotta buy oil. Yeah, I gotta do something about it. Oil is at 100 right now. um it's expensive for
Right.
sure. Yeah, but I think it's it's not going to be sustained to be at its all-time high for so long. Definitely it's gonna
Mm.
drop. You're gonna see other more important commodities like your precious metal running a little bit higher as well, because of you know the it's not just because of the war, but a lot of developments having to go on, projects that the different countries, different developed countries are covering. So all of which will definitely use this precious metal, and it's all happening post COVID. It's definitely going to happen. Yeah.
Mm.
Mm.
Okay, wait. Then one last question on this: as a retail, how do you actually get exposure to like oil, right, or
Right.
commodities? Because I was thinking,
Yeah.
okay, fine, you buy oil majors, but that's doesn't exactly work now, right? So is there like an oil product that you can buy?
I think there's a couple of like like commodity ETFs that you can buy into.
Mm.
Um, I know of like GRN. Those are which like you can buy carbon and stuff like that. Those are like,
Yep.
if you believe that carbon is going to be a big thing because of the whole carbon trading, which is also running in parallel to us. Yeah, some people are looking into that. If not, you have like DBC, which is like is an index that tracks the commodity prices.
Mhm.
GSG as well, which is iShares, S&P GSCI commodity index. So
Got
Okay.
it.
these are just commodity index that they track. Yeah, and you can
Yep. So
probably
And you
so
can
just
buy
so
that
these
index. So.
are
buy it. Yeah,
these are indexes that track the price of
yeah,
the
correct.
underlying
Yeah,
asset rather than having to
yeah,
go through a different company. Yeah.
yeah,
Yep.
yeah,
Okay.
exactly.
Cool.
Yeah,
That's interesting.
Yeah. Because I was thinking buy utilities, but buying the majors now are a bit scary, right? Because you don't know
Mm.
exactly what they are. Well,
Maybe across the
firstly is
board as an indice.
yeah, you don't really know what their Russia exposure is and how they might be sanctioned. You might give up like
Absolutely.
a good asset for cheap. And the second is, a lot of their sales contracts are actually long term contracts. So spot prices don't matter that much to them in the short run, right? It doesn't. I think even
Mm.
last earnings, we were talking about high gas prices, but Shell never actually profited from high spot, right? Or they profited very
Yes.
little because they have a lot of sales purchases that are tied up already, when they are talking about developing a project itself. So yeah,
Absolutely.
I think if you want commodities exposure, probably best to get it direct through like GSG or something rather than buying Shell or buying BP or one of the majors.
Yep. Yep.
yep.
Cool.
Sounds good.
Awesome. Thanks for that. I think that was a good discussion. And of course, back to basics. Lastly, all right, Anthony, you've got 5 minutes. Let's go.
Come on, man. I mean, not talking about war anymore. Do
He's
we need to
feeling
go
that
back and
he.
talking about like Web 2 and like platform economy? That's so boring after
Yes.
this. Okay, yes, but yes. Block, Square, whatever Jack Dorsey wants to call it now, right? They had earnings last week. It was decent earnings, I think, but the market went
Hmm.
crazy. I think it was one of those they had earnings pre-open, and it was one of those days where it was like from the lowest pre-open price to the highest point post close. The share price had moved 50%. Right. So
Wow.
it sorry, their earnings were post close. So from the lowest point of the day to the highest point post close, it was 50% move. Right. It was insane. Partially market sentiment had changed, intraday because of some news. I can't remember what. Who can, every day it changes, then the
Yes.
story changes. But the earnings itself were decent. They had decent growth in revenues. It was 51% up, excluding Bitcoin revenues. Right, it was 51% up year on year. They're expecting another 38-40% next year or this year, FY22, which is again quite decent. Gross profits up, so they're actually a profitable company. I think it's one of those like archetypical growth stocks, right? So I think it's very interesting to look at the story rather than the numbers, because the numbers are, it's tracking, it's good. So when we talk about, I don't know, what do you guys think about Square? Like is it, what's the product?
I'm not sure, man.
Besides transitioning
I
to
wouldn't
blockchain,
say.
right?
Yeah, that's the only aspect of Square I do know. I'm gonna be honest, really.
Well, I mean, it's not something that I'm super familiar with, like Block, Square, whatever you want to call it, right? Like this guy started from Twitter and then went into like this whole
Yes.
You
I
mean
don't
Jack
know,
Dorsey,
like
not Square, lah.
Yes.
yeah, like I mean Jack Dorsey, yes, the CEO, yeah. But I I don't know how to feel about it, because one is that they did an acquisition on Afterpay, right?
Yep.
And like who
Yes.
really heard about Afterpay, to be honest?
Well, I mean, if you're Australian, you did, because they were the largest BNPL
yeah,
provider,
but
right, in Australia and listed.
Yeah,
But
but
they're
there was a lot
Australia,
of
so it doesn't count.
there's a lot there's a lot of stick as well, right? Because of the Afterpay and the credit card debts, and the kind of just sort of in that zone where people think like,
Yep.
okay, if I don't pay this on time, then interest and all of that, right? So I think there's a bit of stigma there as well.
yeah, so there was like
Afterpay.
I mean Rakesh said it right? Like there was a huge boo-ha with them having to be like, oh, harmful for the consumer, and you put people at risk of the whole vicious cycles
System.
of debt and what's not. Yeah, I mean when Block acquired them, then I was just like, oh, okay, I mean what's the value proposition here? Like
Yep.
I mean you're a payments company, yes, you maybe you want to transit into more of a blockchain-ish payments company, but what's really the play? I don't see it.
I
really
don't know
don't
the
see it.
play. I don't know the
Yeah.
play. Tell us,
Yeah.
Anthony,
Okay.
enlighten us.
We probably want to do a stock geek out on this if people are interested, right? Because there's quite a bit to unpack. But I think essentially it's trying to create an ecosystem, right? So they have three main product lines probably. One is seller focused, so your vendors and all that. Essentially, they Square started off as a dongle, so you attach a dongle to a terminal, you can process card payments. Same as what Apple thinks they're so innovatively doing the iPhone. Well, Square did it with a dongle, right? And from there they expanded within sellers to other parts of services to sellers. So they could do payroll for you. They could do this and that. I don't even know what they do because they are already US focused. But essentially, what was interesting to me is that from the seller part of the ecosystem itself, from the latest earnings, about 38% of profit came from sellers using 4 or more products. So it's not just a dongle anymore. It's their payroll, their tax processing system. It's other parts that companies need to have as service providers to run a business, right? That's where Square is trying to expand into, and they build a whole. It's like CRM, right? Salesforce or your other SaaS
effectively
companies.
sort of creating an ecosystem so that you keep buying from
Yes.
them, and then you sort of upgrades, right? So their customer
Yes.
retention strategy is effectively, or their customer retention number is above the 100% that we spoke about, because they just keep buying and buying more of their products.
Exactly,
Which is
right? And but instead of only having the seller ecosystem, they have a buyer ecosystem as well, right? So they have Cash App, which is again very US focused, but it's pretty much the number one downloaded finance app in the US last year, right? It's growing user base again in the US only at 22%. Their gross profit per active user is increasing. So they are building that buyer ecosystem as well. Right? So you think about something like Shopify, they have a seller ecosystem. They're building a lot of things for sellers, but nothing for a buyer, right? How do you reach the buyer? There's nothing. Whereas Square is slightly different because it kind of builds both ends of the ecosystem together, right? Let's not talk about blockchain because it's too up in the air. Nobody really knows what they're doing there. Like honestly, like you want to build a Bitcoin wallet, who cares, right?
Right.
Unless you're super innovative, they do Bitcoin trading, but it's super low margin. So when you look at their revenues, you take out Bitcoin trading because that's just a quote and reporting. And just going back to the whole point about Afterpay and buy now pay later, that's just building on the ecosystem to my mind, right? Because I mean, if have you all tried using like Affirm or Pace or something in Singapore?
No, sorry, man.
No.
Well,
Staying away from all the buy now pay later companies for now.
No, it's great, right? I was of course I bought like a massage chair, and you download from Pace, you pay in installments, they give you a discount, so it's cheaper to pay in installments. And all they do is they charge your credit card for it. So if you don't pay, then that's on your credit card, right? The merchant
use
needs to
it.
pay yeah.
Atomi has a similar proposition
Yes, exactly.
as well. I use it.
Right.
Yeah,
So
yeah.
so these are all the buy now pay later things, and that's building out the interaction between the buyer and the seller ecosystem, right? So you can open your buy now pay later app, whatever it is, search for discounts and buy, right? And ideally, if you are Square and you're a Square merchant, you'll be, there's higher visibility. They want to sign people up to the buy now pay later platform as well. So I think that's where you see the interaction between the seller and buyer ecosystems coming in, right? We don't know. The acquisition just closed in January, so we don't know what effect it will be. But yeah, I mean that just seems interesting. Yeah, and I guess the long-term play is to that this whole closed ecosystem builds up and becomes something different and interesting.
I mean, I hear you. I hear you with regards to what they're trying to build, but I don't get it because one of the other thing that they they have major ownership was is Tidal, the Spotify.
Oh, do they own Tidal?
That one is Jack Dorsey being Jack Dorsey, right? Like
I have no idea what's going on with that. Yeah, and it's not cheap. It's not cheap. Yeah, in that sense. Yeah,
they'll be the next audience or whatever blockchain music is like on right now. I don't know.
Wait, isn't Tidal was it Jay-Z or Kanye West's thing, and then they sold it?
Yeah, Jay-Z. Yeah.
Right. Okay. Well,
yeah,
what is Jack Dorsey doing?
I don't know, right? He's interesting.
Confused soul.
Yeah, he's eccentric lah. Let's put it that way. He's rich, so he's eccentric. If he's poor, he's weird.
Fair enough. Cool.
Yeah,
but I think it's interesting, right?
They want to do blockchain, but that's options, right? That's options that we don't know where they play into. I think. Probably the fairest.
And I think it's quite interesting to note, right? Because the buy now pay later thing, people might offer it. Like, for example, if I was a store and I'm putting myself in a store, right? People can't come out during the pandemic. I'm going to put it up on this ecosystem. I'm going to only get effectively my cash flow is not going to come in all at once, right? And I don't know how they're going to play this between the seller and the merchant, right? As well as their software. But as a seller, say I'm buying this chair, right? This chair that I'm sitting on, I'm willing to sell it at the same price, but I'll receive it in 3 blocks of payments in one in month 1, one in month 4, one in month 7, right? So I would actually be okay with that because nobody's coming to my store. And at the same time, I'd be okay with that because I can also then guarantee where my cash flow is in a few months' time. And then if you get enough of that, you effectively have a stream of income coming through already through a different way of selling your chair. Yeah. So I think that's pretty interesting.
Yeah, I think if we are going to be super bullish about buy now pay later, and look, I have my doubts, right? But if you're going to be super bullish, you can say that it's some sort of like omni-channel strategy, right? Because at the end of the day, it's capturing your online payments in an offline store, right? You're not really going. I mean, if you're going to buy your chair online, that's fine, right? You would have been able to pay by installments without. That buy now pay later is easy for that, but what's been interesting about it is that it's expanded a lot to offline stores. So your Courts installment plan, this is pretty much an extension of it, right? With more technological bells and whistles and more merchants because you don't need Visa or MasterCard to work with the merchant to offer an installment plan, right? You have this intermediary that goes out and tries to be
Does
the
everything.
middleman essentially, and that's
Yeah.
Yeah,
where
true.
that's what the buy now pay later company is doing, right? Are they really going to be very effective at it? What's the credit risk? All that. I think it's a business model that's still playing out. It could very well be like Uber, where your CAC is just way overboard, and you are not going to make any money yet. But if you are Square, maybe it doesn't matter as much, right? Because you actually want people in your ecosystem and your seller and buyer ecosystem to grow so that you can make money off on the other ends parts of the product, right? So if you're someone like Pace or Affirm or I can't remember, there's so many of them, Atomi, right? Maybe you're burning VC cash and you're worried. But if you're Square, where it's part of a broader ecosystem, then fine, even if the unit economics don't work out.
You're bleeding
yet,
less, in other words.
yeah, you're bleeding less, or you are bringing people in the ecosystem, building that network effect, and in the longer run,
Yeah.
playing more. Because at the end of the day, if all other competitors' ecosystems don't work, then you are the winner, right? There's nobody else who can give a viable BNPL product. So
Yeah.
I'm actually quite bullish Square, come to think about it. But yeah.
You just started this entire segment by saying, I'm super bullish about it if you want to be, but I don't think so.
I think, look, there's drawbacks, there's risks, right? It's you have to see it as a growth story. It's not value at all. PE is high, I think. PS is high, but at the very least they have free cash flow and they have positive gross profits. So it's not amplitude.
Hey. Chill. You'll see it. You'll see amplitude. Okay, enough. We're not digressing.
Yeah, enough.
All right. Thanks so much, folks, for spending the time. Thanks, Coconuts, for listening. Hope you enjoyed today. Please stay safe. And if you are listening, in the conflict regions, we send our best. Thanks, and we'll see you all next week.
Everyone.
Take care, everyone. Stay safe. Bye.
Bye.